Alright guys, it's Ted here with this thing I call BodiesXWix, which is basically the look of a candlestick. I hope you guys can hear me this time, because I just did a whole 20-minute segment of actually talking to nobody because I had the mic muted the whole time. But so this time I'll actually probably go through it a lot quicker. We are looking at the Nasdaq today. Why are we looking at the Nasdaq? Because that seems to be the most volatile. And also right now, especially the futures, if you're trading futures, and also it seems to be the one that's consolidating the most if you look at the larger time frame. So if we, maybe not like the weekly, but more like the daily, this thing just doesn't seem to be really going anywhere fast, which is super surprising for the top 100 heavy top tech stocks in basically the world. Why are we stuck in this kind of range bound area? So what I wanted to do is just basically take a look at today, try to break down today, try to break down the week, and move on from there. So I tried making my call early this morning. Actually, I'll reload this. Looking up, looking down, knowing smart money concepts, you got to ask yourself, where is the liquidity that the market makers are going to attack? The market makers are those who have a lot of the money, who can push the markets around. They're going to attack areas of where liquidity is resting. People that have their buy stops resting there, or their sell stops resting there, they're going to be attacking those places. That way they pull you into the trade, and then they suck you back out and take your money, basically. So they buy into a high and they sell into a low, and then they'll buy themselves back out or sell themselves back out, whichever direction is going first. So I looked at this and I thought, okay, which way is it going to go? And at first I thought, okay, there is definitely some room below that it's wanting to get to break liquidity. Wanting to break liquidity down here at this like 11:15 mark. All right, I'm looking at two different screens right now, trying to make sure. Yeah, 11:15 mark, and also this level right here at this 3:15 mark, this low. So I thought those would be the two levels that we'd probably be distinctly looking at. And midway through the day, basically where we're at now, I think is where these lows are here. So if we were to hit play and see how this plays out, it basically does just that. Now, why did I pick this as a high? All right, so in the 15-minute, if you look at this in the 15-minute, there is a 15-minute fair value gap right there that it would probably reach up into, while also breaking a couple highs along the way, taking that liquidity that it had, going up into that opening, and then hitting that fair value gap. But also not only hitting that fair value gap, if you look at the 1 hour, if we go back here and we look at the 1 hour, on the opposite side of that peak of the 1 hour, there is a bearish order block, basically. There we go. So yes, this little red candle here. So you have a 15-minute right there, a 15-minute fair value gap, and then basically right in between there, you also have the bottom of this bearish breaker. So I thought it has to land somewhere in between there. That's where it will probably get sucked up into. It'll hit that, it'll get rejected, and then it'll drop back down and heading for these lower liquidity levels, which it actually is doing. So, and again, these liquidity levels are designed, not really designed, but these are for the market makers. Market makers want the price to go to these areas. And as soon as they get to these areas, they're going to yank them right back away, because they're going to think that you're thinking, oh my God, it went through it. It didn't actually close below it. But since it went below it, you're going to start selling off. And that's what they want you to do. That way they can buy it back up and drive it up just for a short bit until they sell it back off again. Because again, they're still looking for liquidity levels down here and right here. Actually, draw them out really quick. Why not? Right here. Right there. And of course at the very, very bottom. Right there. I think they're still looking to go for each of these liquidity levels easily, but it could take the whole week. Or it could take 3 days. You know, it could be until Wednesday this week until we get way down here. Who knows? But that's what I saw. That's what I saw today. I saw that, you know, the bearish order block, or the bearish breaker, sorry, and the fair value gap right in the same area. I knew it had to get rejected at that point. What was crazy is if you look at the 15-minute, if you were watching this, what it did at 11 o'clock was it dropped down and it ran right back up almost to that same high. And so I was almost worried that we were going to be breaking that and running away with it. I thought my idea was going to be wrong. But it seems that the market makers really do want this to go lower. So, and that's what I was thinking too. They're wanting it to go lower. They're wanting to get their hands on cheaper stocks. They're wanting to make more money on the way up. It could be a number of different things. Who knows? But when I think of how I was trained to trade in smart money, I was always trained to think how rich people would think, how you would want to run your business as a rich person. If you could push people around with your money, how would you do it? And this is exactly how they would do it. So, as you can see, it would run back up into this. I think if we went to I think was it a 5-minute? I think the 5-minute, there was two 5-minute candles right up in here. Now that forms a breaker right there. You have a high, low, lower high. Now, at the bodies of these lows is where that breaker is. Technically, the rules should state that it should not. I mean, it can spike through the top of this, but it should not close above this breaker. So what is this breaker's high? 20,060 and 50 cents. Technically, it should not. I mean, it can get to the top, but technically, it should not close above. If it does, then it should go back down below. So, well, that's the whole point of the bearish breaker, right? Is to reconfigure the chart back away from that movement, and it'll probably be heading back down toward these liquidity areas. You know, it keeps creating more and more lower liquidity levels, even though it made a pretty good run, you know, for the London high. You know, this is before, this is right at the start of the Asian market, basically last night. Okay. And then it's been going basically sideways and downhill from there. So I don't see why it wouldn't be any different, at least the first half of this week. So, but anyways, I am actually trading. As you can see down here, you do how you do an account balance. No, that's not real money. That is fake money. That is fake money from Apex Trader Funding, where you can actually sign up to get a paper trading account, and if you pass your paper trading account by earning so much in your paper trading account, then you can get a funded account. So you can actually get an account funded with anywhere from $25,000 to $30,000 or $300,000. You just got to pass the test. Unfortunately, I don't have a whole lot of time to do it. You know, I only get a couple of days to trade here and there if I can, but if I do, I definitely try. But yeah, I'll include the link in the email down below if you want to sign up. Anybody that wants to sign up, I believe it's 71% off right now, which normally you know for like a $25,000 account would be like a 20, 30, 25 somewhere down there. I think some $7 a month. Until you pass the evaluation. Once you pass the evaluation, then it's a lifetime fee, and that's it. As long as you stay on the evaluation account, you don't blow your account. So that's another stipulation. But all that you can look into once I put the link out there, and you can look into it. I was just primarily fascinated in looking into this Nasdaq, how it was going to play out. And look, as you can see, as we called it, it did not go through the highs of that breaker, and it's still starting to drop. We knew it would go through those liquidity areas. And once it went through the liquidity areas, it would draw back up into that breaker area. Now, once it's hit that breaker area, it's starting to drop again. So I think we're going to see more and more of this, faking out, pulling back, faking out, pulling back, because you got to think like the rich people do. You got to think how they trade. If you're doing all this stuff with trend lines and you know, sharks and bats and whatnot, I'd hate to tell you, but you're wasting your time. I've done all that. It doesn't work. Look up the person that I've been mentored personally by. His name is Inner Circle Trader. He can show you exactly where price is going to go and where it's going to be. But every day is different, so you got to do the homework. You got to put in the work. You got to really look into it. So look into Inner Circle Trader, understand smart money concepts, and you too can be way better at reading the market than what you may be, because you got to think. I mean, really, anybody that's actually a day trader and making money, there's not many of them out there. There really isn't, because the market is so manipulated. So you got to learn how it's manipulated. You got to learn why it's manipulated and how they're going to manipulate it. And once you see that the market makes the same moves every day, maybe just different times, you can capitalize on those, and you can just make a couple grand every day, and depending on what your account size is. I mean, if you just want a couple hundred a day, whatever, you can find those moves, take it with you, boom, you're done. I've already made 700 a day, so I could call it quits if I wanted to. I probably will. But yeah, take a chance, get out there, and become a funded trader. What's it gonna hurt, right? All right. I'll also leave some other, of my affiliate links in there too. Maybe some crypto stuff, like I don't know. I'll leave something down in there. But yeah, check out the description in this video below for Apex Trader funding. To click on that link to get you 71% discount, maybe 80, maybe 90. I don't know. They change it up all the time, so check it out and take advantage of it. Okay. All right. Well, thank you for tuning in and checking out the Nasdaq 100 with me in the futures market. It was very exciting, to say the least. At least I'm excited, because it did what I thought it was going to do. I mean, you guys can laugh at me all you want. I know it's funny. But yeah. Okay. I want to hear from you guys too. If you guys, you check out my website. It's BodiesXWix.com with the word and. You can always go there. There is should be a form submission, or my email should be out there for, it's just info@bodiesandwix.com is basically what it is. So, write to me, whatever you guys, if you guys want me to do like a special thing on like maybe not Nasdaq, maybe you guys want me to do the Russell one day or gold one day. I don't know. I really want to get back into podcast, into this role of talking about the market a lot. And I need you guys' help. So help me out. Give me some ideas here. Yeah, let's get this train going. All right. I don't want to see this price come back up. I'm pretty sure it's going to, if anything, all right, another rule of thumb. Last thing I'm going to do. If anything, oh, it didn't close below. I can say if it closed below this green candle, it shouldn't come up more than halfway through it, but it didn't close below it. So this still has a chance to come up into this area here, where we see these two up candles are for this breaker. So yeah, this small 5-minute breaker, two candles put together for a 5-minute breaker. That's where we could see that being pulled back up into. It looks like it's going to. All right. Anyways. Yeah, glad to talk to you guys. Glad to be back. I know I haven't done a video in a while. Again, shoot some ideas out to me, what you want me to do. Check out my website, and then shoot me an email if you want. Let me know, whatever I can to do to help, if I am of help at all. If I am of help at all, that's what I'm trying to say. If I'm not of help, then just tell me to F off. I'm not gonna care. All right, guys. But thanks a lot for listening in, and hopefully I'll see you soon. Bye.